Okay, so just a kind of a little reminder that those withholding amounts that we have been entering into the tax return problems and that are showing up on the W-2s that we're using for our Tax Act assignments, those amounts are, the origin of those amounts are payroll taxes and the amounts that have been withheld from employee paychecks. So that's why we want to take a look at this and how, kind of remind ourselves how that all works. Those payroll taxes are the biggest way that the federal government funds itself. So, you know, in the olden days, they would just collect payments at the end of the year. Like, there wasn't any withholding tax until like World War II. So the federal government would have to wait for payments, and then they would have to hope that people made the full payment. Because what's going to happen if you wait to make a payment for something at the end of the year and it's a big payment, you know, there's a fairly good chance that you might not have the money to make that payment. And so obviously the federal government was running a big risk by not collecting those funds at the source. And so in World War II, because they needed the revenue funding for the war, they instituted federal income tax withholding, so which is a requirement of employers if the income that is being received by employees is subject to income taxes or Social Security and Medicare taxes, and if the individual is considered to be an employee, then that income tax withholding and Social Security and Medicare tax withholding is required to take place at the source. So that's why we have, you know, we get our net paycheck and we're like, where did it all go? So it went to, most of it went to prepaying all of those taxes, which you now all understand. Those prepayments then end up on the 1040 when we're doing our calculation of the actual liability that is owed. But the whole reason behind the withholding is because the federal government needs those funds regularly in order to fund their operations. So that's what we're paying for with that withholding. The W-2 form, as a reminder, is a summary of all the employees' earnings that have occurred during the course of the year, as well as the amounts that have been withheld, federal income taxes, Social Security and Medicare taxes, any taxable benefits that may have been received, any pre-tax contributions that may have come out of the employee's paycheck. All of that stuff is summarized, as well as all the state information on that Form W-2, which is received at the end of the year, and then the W-2 is what's used by the employee to prepare their Form 1040 come April. Tipped employees as well, tips are considered to be taxable income as long as they exceed, I think it's $30 a month. It would be considered taxable income, and they do have to be reported on the W-2 form. There is a space to report those tips as well. Let's see. All right, any questions? It's pretty simple, right?